All right, guys and gals, back to work tonight, Wednesday evening after all. It's August the 26th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, my job tonight in this video is to help us find the best entry setups for tomorrow. That's Thursday's trading session, and I got a pretty good video in store for you guys and gals tonight. The charts are all prepped up in the background. As you can see, we got the oil, we got the E-minis, and of course, we got that gold on our radar for tomorrow. Speaking of tomorrow, we got some big news coming on the schedule for tomorrow. Got a hurricane brewing right in the southeastern portion of the U.S. And boy, that gold might have its eye back on some big round numbers here for tomorrow as well. I have a lot of great setups we're tracking for tomorrow, Thursday's trading session. Before we jump in though and get our hands dirty on these charts tonight, as always, I want to encourage you guys, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every evening on this video newsletter. And don't forget, if you guys have any questions at all, drop those questions in the comment section below. I'll be checking comments and questions after I finish publishing the video later on tonight. And you know me, I always appreciate you guys tuning in every evening and watching this video. If you're like me and you rely on this newsletter to get your mind right and get those charts right for tomorrow, hit that thumbs up button for me tonight. Always appreciate you guys coming in and supporting this channel by subscribing, hitting that thumbs up button. And don't forget, if you guys have any questions at all, drop those questions in the comment section below. But let's not waste any more valuable time. We have a lot to cover here tonight in this video. We get some news for tomorrow, some big moves on the charts. Let's not waste any more time. Let's kick off tonight's video with the calendar for tomorrow, courtesy of Econo Day. Let's see what's happening here on the schedule for tomorrow. Tomorrow, of course, is a Thursday morning. Tomorrow is a pretty big day. This is probably one of the most, might be one of the biggest days here of the week tomorrow. Now, before we talk about what's jam-packed into tomorrow, Thursday's trading session, I do want to remind you guys, we are in kind of that cocktail right now of that end-of-month volatility and the back-to-school time, right? End of the summer, right? Last few weeks of summer. So this week and next week, all the parents are, right, boy, I feel bad for those parents out there, right? Having to go through all the distance learning, the learning at home, right? So we know there's probably a lot of distractions out there, right, among all the parents out there. But back to school season, so end of the month, right, end of the month volatility. Last week's summertime here, we are looking at a low volume but higher volatility kind of cocktail, right, as these kids go back to school. Now this week, of course, we've had a stimulus showdown on Capitol Hill, right? We know they're still fighting back and forth regarding stimulus, right, on both sides of the aisle in Washington, D.C. We also know there's a hurricane headed towards Texas and Louisiana. We talked about this earlier on in the week. Today, that hurricane was upgraded to, and I quote, an extremely dangerous Cat 4 hurricane, which is only about less than 100 miles off the coast of Texas and Louisiana. Remember, they pump a lot of oil into those cargo ships that flow in and out of the Gulf of Mexico. So oil is definitely going to be on our radar for the rest of the week this week. We heard today from new vaccine updates from Moderna, huge earnings blowouts from people like Dick's Sporting Goods and Salesforce, and we had some pretty strong durable goods that came in this morning as well, and that definitely kind of put some fuel on the fire going higher here. So it's been a pretty busy week, right? So again, we continue as we go into Thursday and Friday's trading session. We do continue to expect to see more of this kind of sluggish volume, but more volatility, again, because it is the end of the month. Tomorrow, how big will this hurricane get? Tomorrow, will we hear more about this stimulus, right? Tomorrow, will we continue to see more good news tomorrow? For example, we get the GDP coming out tomorrow, the jobless claims tomorrow at 8:30, right? That's some big news on our schedule for tomorrow. Jerome Powell speaks tomorrow, right? Just after 9 o'clock Eastern time. And I would imagine most of what you saw today in the financial markets, especially on the E-minis and the gold, I would imagine is most likely kind of posturing ahead of Jerome Powell's speech, right? I'm sure everybody is going to be listening in tomorrow, right, just after 9 o'clock, because everyone's kind of waiting to see, okay, everything's back to all-time highs, numbers keep looking good, virus cases in the U.S. keep dropping, all of the numbers we saw this week, right? New home sales, record-breaking number. Durable goods, record-breaking number. Very, very positive news, right, coming out the last couple days here. So will Jerome Powell, will he make any different commentary? You know, we've basically been told that they're going to be accommodative, right, until 2022, as we heard a few months ago. So the Fed, you know, now the Fed, it's called the Fed put, right? The markets are pretty much convinced the Fed is going to bail out these markets no matter what happens. Will he repeat that? Will he beat that same drum again tomorrow? Or will things start to change tomorrow? I do think that's going to be one of the biggest kind of what ifs, right? One of the biggest known unknowns for tomorrow. Will Jerome Powell, will he keep the, you know, we will bail out the markets, you know, no ifs, and, ors, or buts? Will they keep that kind of posturing for tomorrow? Or will he allude to, right, good times coming, easing of these measures? What's going to come out of his mouth tomorrow? That is probably going to be the most important thing that we will hear tomorrow morning. So those are the two big news reports for tomorrow, that GDP and the jobless claims at 8:30. You definitely don't want to miss that first hour of trading tomorrow morning. Jerome Powell definitely has potential to kind of slow things down a little bit, but I would imagine after the initial jitters when he starts his speech, right, I would imagine the markets should pick up as we go into that kind of 10 o'clock to 11 o'clock hour. So I'll definitely be at my desk early tomorrow for that GDP report. And then if I had to guess, I would say, you know, 9 o'clock, 9:30, 9:45. By 10 o'clock to 11 o'clock, 10 o'clock to 11:30 tomorrow, we should be seeing the dust settle, the market get the jitters out of the way from Jerome Powell, and we should see some response to what, or should I say, some tradable response, right? We may see a response right away, but it may not be tradable right away. So we'll stay patient around that Jerome Powell speech. And then supposedly tomorrow night, we have the kind of the official, we get the Republican convention going on right now in the U.S. right now. Tomorrow night, supposedly, is the official speech from the convention by the U.S. President Trump. It doesn't seem like he's going to say anything tomorrow night that he hasn't said already. So I doubt we're going to get any surprises out of him tomorrow night. But if you know the U.S. President Trump, right, he definitely likes to put on a show. So that we definitely may see something late in the day tomorrow that bleeds into Friday's trading session. So Thursday and Friday really looking like some really great opportunities for us to grow the accounts here, and especially, right, with us together in our trade room. Don't forget, tomorrow morning we'll be in the trade room at 8 o'clock Eastern time. I'd love to have you there trading all this action with us. What I'll do is I'll put a link for you guys down the description of this YouTube video. Grab that link, get registered for tomorrow morning's trading session every morning, Monday through Friday, 8 o'clock Eastern time in the trade room. Don't be late though. GDP kicks off at 8:30, right? Definitely stick around for the latter half of the morning for that for that 10 o'clock to to 11 o'clock move. And then what will we see tomorrow afternoon, right, as we start to hear from the U.S. President Trump? I'll be right there with you guys tomorrow morning in the trade room to do it all with you. All right, let's jump to some charts here. We know what the schedule looks like, and there's a lot going on right now. I'm very curious, right, how the rest of this week will end up. All right, let's talk markets here right now. We got the S&P. We got the oil, of course, and we got the gold. Boy, gold, very interesting chart tonight on the gold. Gold is just running hard, but we've got some headwinds overhead here on the gold. If you look at the bigger picture on gold right now, we've got a bit of a pendulum swing just overhead here. So, I mean, I'm wondering what we're going to get on gold. I got a pretty good plan of attack for you guys, no matter what we get tomorrow on the gold. Over on the oil is really kind of that market that everyone's kind of looking at going, wait a second, this market's way too chill right now for there to be a hurricane, Cat 4, right, on the southeast coast of the U.S. right now. This might be the biggest kind of breakout market for tomorrow. We've really got a good plan on the oil. There's a lot of moving pieces on oil right now. I'm going to break that down into more details here. And then how about that S&P? don't tell the S&P, please don't tell the S&P that VIX went up 5% today as well. It was a very interesting, it's always interesting when you see the S&P making these huge moves like this. At the same time, though, you get gold spiking higher, right? And you got the VIX going higher. That doesn't happen very often, right? So it must be the year 2020. Let's jump into this S&P here tonight. It must be 2020, right? Nothing makes sense this year right now. So markets are definitely a little bit they're interesting, aren't they? Right? Yeah, we don't see that very often. You don't see the E-minis and the Nasdaq making all-time highs while the VIX is going higher and the gold is going higher, right? Gold, of course, is that shelter metal, right? VIX, of course, being the volatility index. And you wouldn't think with the volatility that's going higher, right? People buying protection obviously in options markets. You wouldn't think that higher VIX would mean a higher E-mini, but hey, it's like I said, it makes sense. It makes sense for it being 2020. All right, let's dive right in. Over on the S&P, what do we got today? Well, we got a pretty strong move higher. I think that's pretty self-explanatory. The buyers definitely have control of this market, and I'll tell you, the buyers got a gift. They got a gift here later on, earlier this afternoon here. What time was that at? Right about 3 o'clock here this afternoon. They did get their chance, right, to buy that trap low. That was the only trap that we saw pretty much all morning here, right, or all day today, right? Went up, pulled back, went up, pulled back, went up, big move up, right? The little trap low there. What does that look like? That looks like a two-try trap pattern, right? Strong move up, shallow pullback, higher high, trap low. We talk about that pattern quite a bit on this newsletter, don't we? So we know we're bullish, and the first thing that comes to mind is on a day like today where the VIX was up, the gold was up, and the E-mini was up. Oh, and by the way, we got Jerome Powell talking tomorrow, right, at the Jackson Hole Summit. In most situations, we're probably going sideways here for at least the first portion of tomorrow's trading session. So I'm definitely anticipating a range up here. Now, this range, right, it may be at tops, it may be a bit lower here. So we definitely we definitely know that a lot of this is probably just posturing, right? Again, ahead of tomorrow's Fed speech at 9 o'clock, 9:10, 9:15 Eastern time. So it's probably going to go sideways, right, overnight. Obviously, these markets, right, they have a mind of their own right now, so anything is possible. But we know we're bullish. I'm anticipating a trading range here for tomorrow. I would assume it might come in right about here, something like that. That might be kind of where this market kind of settles into, right, a range here for tomorrow. Now, if I had it my way, right, I can see some real easy setups here right now. We know we're bullish. I'd like to see a nice deep pullback. What I'd like to get is, I'd like to see a nice deep pullback right now. I'd like to get some of these bears to try to get short, right, on that pullback and just buy right into those stop losses, right? It'll look a lot like this one back here, where they pull back, the bears try to get short, right, and buyers are buying right into their stop losses. So that will be kind of the ideal for me tomorrow. But in all reality, we want to make sure that we have kind of everything basically accounted for here on this chart. So it really all depends on how far this market pulls back. We know we're bullish. There's not a lot to work with, right, on this chart. I've got a trend line drawn across these highs, off those lows, right? That's going to be an area of support, right? This area down here is a huge area of support for us. And again, I will be keeping an eye on the possible trading range here as we go into the overnight session here tonight. So I think one of the most important things, we talked about this last night, was it really all depends on how deep this pullback is right now. For example, if we just pull back down to the low of this channel, it's going to potentially be right inside of that range. And so to keep me out of trouble in this, I'm going to look for that shallow pullback trap, right? Basically a two-try trap pattern. I want to be a buyer, right? But again, I'm concerned, though, this market may be, right, destined here for a trading range here. So for me to want to be a buy this on a shallow pullback, I'm looking for a trap, right? Trap patterns are really my go-to pattern when I'm worried about buying too high. So again, I want to buy at support. I've got some nice, easy support levels I've marked up down here. I have no problem buying on a shallow pullback. I just want to make sure I get a trap entry to avoid buying into overhead resistance. If we can get a little bit deeper pullback now, down into my first battle zone here, if we can get a little deeper pullback now I can start getting more excited, right? Now I can wait for those bears to come over. I can wait for them to get short off the moving average. That will tell me exactly where those stop losses are, and I can buy right into those stop losses. Now, keep in mind, too, a lot of times those stops will get run, the market will jump higher here, and then we'll usually quickly pull back to that moving average again for another entry as we go back up to retest the high. So again, we know we're bullish. I want to buy at support. If I can get a modest pullback, not too shallow, not too deep either, right? Get me underneath that moving average. Get those bears to commit to selling below the EMA, buy into their stops, buying pullbacks, targets, of course, back up to retest that high. And then you've got what I think what everybody really hopes we get here right now, right? Which is a really, really deep pullback, right? Keep in mind, guys, if you go back in time here, right? And this market really hasn't had a deep pullback since about 10:30 yesterday morning, right? They got that little trap low there. But, as far as a nice deep, shake you out type of correction, right? We really haven't seen that just yet. So if we can get a really deep pullback here, these deep pullbacks, you know me, whenever we have a deep pullback, I like to look for a little bit more conservative entry off those lows. I like to wait for the bears trying once, bears trying twice, and once I can get those bears trying a couple times on that pullback, now I know the aggressive sellers are in, the patient conservative sellers are in, and I know exactly where their pain points are, right? And that's the key when you're looking at a deep pullback like this. I try not to try to pick a bottom on this, because sometimes those pullbacks end up being full-blown 1, 2, 3 reversals, right? Most of them will snap back higher, right? Most of them will snap right back higher. But when you really get a deep pullback off that high, though, remember, momentum is really strong at that point, and you want to give those bears a couple tries, right, to kind of get that going. And then if they fail, then perfect, right? Then we can buy into those stop losses as the market goes higher. Because if they hold it, and a lot of times they do, if they hold it, I'll get stopped out and I'll feel like a fool for picking that bottom, right? Trying to pick that bottom there. So I'm going to wait for those bears to try a couple times. I'll draw a trend line off of that low. And there really are two places to enter this trade. One would be, of course, off the trend line. That's my favorite way to do it. The other, of course, there would be, right, buying into, as I say, buying into the pain point, right, of those sellers. Now, remember too, is that once those bears fail on these deep pullbacks, they oftentimes just run. And we get those two-try trap patterns that follow up, right? Strong move up, shallow pullback, higher high, into that two-try trap pattern, right? So keep that in mind too. So if we get that deep pullback, look out for that nested failure. I call these nested failures, because basically a failure inside of a failure into a two-try trap pattern. Again, targets are all pretty easy, right? Back up to retest that high. The only real question I have right now is, do we keep going higher, right? Does the market continue going higher? If the market keeps going higher, I'm still waiting for that deep pullback. I'm waiting for that right, that sellers getting stuck in the wrong side, right, to buy back up again, right? Keep looking for these seller failure patterns if the market wants to keep going higher, right? Again, I'll keep on using this channel. Now, let's say, for example, they run higher here. What I'll do is I'll mark up a new high. I'll bring a new channel. I'll wait for a pullback, right? And again, we'll look for that same basic idea, right? Bears getting short and buying into those stop losses. So if we do continue to see this market going higher here, I'll just simply adjust my channel higher. That way I can look to buy the low of that channel with that failure pattern. And speaking of failure patterns, if we do end up back inside this range, right? If we do end up back inside a range here, what I'll do is I'll measure the size of that move above to the size of the move below, right? We call these pendulum swings, right? Symmetrical move up, right? Move down. I'll mark that as a new area of support. And that's where we're looking for that breakdown, those sellers to get fooled, right? Bears try buying or selling the breakout pullback. And again, like I said earlier, speaking of failures, we can look for breakout pullback failures below the low of that trading range, right? That two-try failure pattern that we love so much in range-bound markets. So again, we know we're bullish. It all depends on the pullback, right? Is it a shallow pullback looking for a trap to avoid buying high? Is it a deep pullback looking for bears to fail and go higher? Is it a really deep pullback, right? Looking to wrap that rope around the bears, right? And then buy right into their pain points. It all depends on the size of that pullback, right? And of course, momentum that comes along with it. And you know, guys, we are just scratching the surface of this technique in this video tonight. I go a lot deeper dive into momentum and pullbacks and entry patterns in our free trading classes. I'll put a little link up there in the upper right hand corner for you guys. Grab that link. If you haven't done so already, make sure you register for our free trading course, because as part of that course, you'll learn my 3-step strategy, my 4 favorite entry patterns. Failures and traps are 2 of those 4, and I'll send you hundreds of examples of how we apply those setups to our favorite futures markets. So you definitely owe it to your trade account to grab that free trading course, right? It's absolutely free. Everybody loves it. I get a lot of great feedback for the free course every week, so I think you'll like it as well. So make sure you grab that free course in the upper right-hand corner, and don't delay. Get registered, right, for the course. Now, as we keep going, one thing we haven't talked about is a bear market, right? How do we sell this market right now? Well, I'm definitely not any turning point, right? We're not at some major level of resistance. It's not like we've completed some measured move. We're not at a turning point in the market right now. We are at a turning point in a couple markets. We'll talk about that in a moment, but we're not at a turning point right now. So I'm not really in a position to try calling this top with a crown reversal pattern, right? We'll talk about that on the oil and the gold though, because those 2 markets may indeed be looking at a turning point here. We might be able to look for a crown reversal to get short on a failure. But on the S&P right now, there's nothing up here. There's nothing up here. There's no way to tell, at least not until we get to that 3,500 big round number waiting overhead. So really the only way I can justify right now, only way I can trade what I see, not what I think, is to get a 1, 2, 3 reversal pattern. That means in order for me to want to sell this market, momentum needs to shift. Now, I don't mean a strong pullback. Well, a strong pullback is definitely the beginning of that shift, but now the bears have to hold that pullback and jump off the moving average. We call these 1, 2, 3 reversal patterns, and these reversal patterns they're very, very common. Didn't happen today, obviously, but you'll notice again, if they don't hold it, right, if we get a strong move lower and they don't hold it, what's going to happen? It's going to snap right back higher again. But if those bears, if they can hold that pullback and really run off the moving average, now I can mark up that low, I can mark up that high, and I can get short off the high of that new hidden channel. We call these 1, 2, 3 reversal patterns into a hidden channel pullback. Where's my objective? Where's my target? It's definitely going to be that range that we spent the first couple hours in here this morning, then at that 34, 45, 34, 40 area. That's an easy magnet for those sellers. So what will tomorrow bring? Will it be a range? Will it be a shallow pullback? A deep pullback? Will we keep on going higher? I have a great plan here for you guys, and hopefully I'll see you tomorrow morning in the trade room, and we can trade all this stuff together. How about some oil here tonight? How about some oil? Let's talk about the oil. Oil has a hurricane, right, about to affect it here as we go into the rest of this week. And let's see, there's a lot to talk about here on the black gold, the Texas T, the oil futures. Now, what it looks like is happening right now is it looks like there is a wedge brewing right now on this chart. That's what it looks like. It looks like there's a bit of a wedge brewing right now, which would make sense because of the hurricane. But to be honest with you, when there's a hurricane bearing down on the east coast of the U.S., right where all those shipping tankers, right, are fueling up and where a lot of the oil comes out and goes into the country, usually oil is going to be a lot peppier than it is right now. So one thing I'm definitely thinking is either this market is waiting to get its engines revved up tomorrow and Friday, or there might just be something the wisdom of crowds knows that we aren't quite seeing yet. You know what I mean? Remember, the markets are always right. The markets are a collection of diverse opinions. Great book, right? Ever read that book by a guy named James Surowiecki, right, called The Wisdom of Crowds? And in that book, right, James Surowiecki, I believe is how it's pronounced. Great book, right? Great book, Wisdom of Crowds. I'll put a link down in the description of this YouTube video for a copy of that book. What he talks about, right? He talks about the markets are always right, and the fact that the markets are a diverse collection of opinions, right? Unable to communicate with each other. The market's always right. So when I see a market sitting here like this, a market like oil that for now, a couple days now, we've got this news headlines about hurricane. Today, they upgrade the hurricane to a Cat 4, right? Quote unquote, dangerously, right? Dangerous. What do they call it today, right? They called it extremely dangerous, right? Hurricane Laura, Cat 4, extremely dangerous. So you would think this market will be jumping here right now. There might be something that we don't exactly know yet. The markets have already picked up on. So I tend to believe the markets over the Weather Channel, to be honest with you. So that's what I'm thinking here right now. It does look like we know we're bullish. We're definitely bullish. It looks like we have this wedge going on right now, and so I definitely would like to be a buyer right off of that wedge, but you can see this one big problem, and that is we're right up around these big highs right now, right? We talked about this last night on the newsletter. Again, we're definitely bullish. There's definitely no doubt about that, but look where we are. We're right around those big highs up there, right? So we've got to really get some momentum, or we've got to get creative if we want to buy high up here. And of course, my best option is to buy with a trap. So that's definitely something on my radar here for tomorrow, right? I want to be a buyer here, but I don't want to buy too aggressively as we go higher. One thing I can see, let me just kind of clean this thing up here right now so we can kind of get this all organized. I want to make sure you guys can see all the stuff I'm marking up on this chart right now, right? That's where that measured move comes from overhead. I also want to bring your attention here to this high, right? Because you can see what happened today. The market spent a lot of time inside that range today, right? Jam lower, seller failure, blast right back higher. But look where they closed though. Look where they finished up the day. They finished the day right back down inside the range, and most importantly, underneath that low from yesterday. So again, does this market know something the rest of us doesn't know, right? About this hurricane? Is this hurricane gonna miss the worst parts of it? I don't know, right? But it definitely is very, very interesting how this market is not showing that extreme bullishness it normally would. So what does that tell me? What does that kind of failure above the highs tell me here? Well, again, it doesn't mean we're bearish, but it means that this market is clearly rejecting these higher prices, right? So we're definitely bullish. I want to be a buyer. I want to sell this market right now. But that rejection above that high, what does that tell me? Well, oftentimes the amount of the move above the range is the amount of the move below the range, right? So as we kind of unpack this right now, I've got the range underneath me, right? We jump lower, we jump higher, we come right back in, and we close underneath that low. Buyers have it, but they're being rejected. I would imagine now they may want to swing back in the other direction here. And of course, because we're not seeing that blast higher here with the news headlines today, that may definitely be where buyers are waiting, right? At a lower price here. So I want to buy at support. That's one area of support I can see on this chart right now. I've also got this trend line you'll notice coming down. That is a nice area of support for me. I'm also drawing a trend line off of these highs, bring it up off that low. That is a great area of support here for us as well. So we definitely can see there's a lot to look forward to down here inside of this battle zone. So buyers have control. We're seeing some concerns about the hurricane, or the lack of follow-through, right? Anticipation of the hurricane, and we're seeing rejection. Seems like this market wants to pull back to attract more buyers into it, and so we're looking for right? Some support levels, support levels, support levels, really showing us a nice spot there around that 43 to 42.75, right, block below us here. So we've got that under control here this morning or this evening. We got our battle zones above, our battle zones below. Now, it all depends on what this market does. There are two basic scenarios I'd be ready for. Well, I guess you would say three basic scenarios. One would be if we sit inside this range tomorrow. Two would be if we go higher here, right? And three, of course, would be if we get that pullback. So let's make sure we are ready for the action. Now, of course, let's take the downside here first, right? If the market gives me a shallow pullback, I always have to look for traps, right? So shallow pullback, just below the low of that range, I'm looking for a trap. And that might happen. That might happen. This could easily head fake, into the open in Asia. Everyone's thinking get long right away because of the hurricane. Meanwhile, they tank, right? But not too far, and we trap below that low, right? This would be an easy entry here in the early part of the overnight session. Or maybe we get a deeper pullback. Right? That deeper pullback now. Now, this would definitely be where the fun starts to happen, right? Now, of course, we can start getting those bears taking the bait. Bears will come in, try to get short off the moving average, and we can buy into their stops. We can buy those pullbacks for that rally going back up to retest that high. That is a great setup for us tomorrow. And again, if we really get clobbered, right? If we really get clobbered here, we'll start to use that nested, right? That one try for the bears, that two try for the bears. Find that trend line, right? Grab that trend line, and of course, let those bears, let them wrap that noose around their neck, right? Let them wrap the rope around their neck and buy right into those stop losses. Buy that two try trap pattern to finish off the move back up to retest those highs, right? So there's some options here for us on the pullback. Is it a shallow pullback, right? Is it a shallow pullback with a trap? Is it a relatively deep pullback with a failure into pullback combination? Or is it going to be a deep, deep pullback, which of course is that nested failure, right? One try, two try for the bears, buying into stops, and then buying that trap, right? Buying that trap before we make a run back up to retest the high. Well, how deep will this market go? Now, what if it sits here and goes sideways tomorrow? If it sits and goes sideways tomorrow, what's the plan? Anytime I have a sideways range, I want to buy underneath that trading range by using a failure pattern. It'll look very similar to that right there, right? The market will try to make a run lower. The bears will try to get short on a breakout pullback off the moving average, and buyers will be waiting to buy into their stop losses. So if we do start going sideways here, don't give up on it. Stay patient and wait for that pullback, wait for that failure. And as long as we aren't just barely below that range, we shouldn't have to worry about a trap. Traps are really ideal when you're trying to trade just below that trading range. The other scenario here is as the market goes higher, right? If the market runs higher here, there are two basic things I'm watching for. One would be a rotation. Remember, we've got this wedge, or this, kind of bullish triangle, if you will, and it all points up to that measured move. You'll notice if I zoom out here a bit further, it all pretty much points up to that $44 a barrel area. So we know where they're trying to go here. One scenario, again, if I can kind of draw this back up again, one scenario would be if we go higher here and then pull back to the low of this wedge, or this triangle, if you will. This is a great example of where I really want to be careful buying up here, because look where we are. We're right around those highs. We're right around these major highs right now. So what's the best entry pattern to avoid buying high? You got it. It's trap, right? Trap pattern. So one try for the bears, two try for the bears, trap low, and back up we go. So that's going to be an easy entry setup for us if all we get is that little small rotation. And what that will do is that will allow us to participate off the low of this wedge, right? Or this kind of, contracting channel, if you will, right? These two trend lines get closer together. That would allow us to participate off the low of that channel without doing it too aggressively. Right, without going too aggressively. In fact, you can see kind of an example of that right here, right? They go down, the bears try once, right? They try twice, and you can see, right? Now, not really my cup of tea, right? I wouldn't go doing it right there, but that's the same type of idea that we're seeing up here, right? So we go up, we pull back, we get back below that moving average, Bears, of course, now they try once, right? They try twice. And now, of course, we're looking at that trap going higher from there. These trap patterns, we find traps. Traps are my favorite entries because they allow me to buy nice and low. And the reason why they call them traps is because they trap in, or in this case, these sellers selling that breakdown. Right? Believe it or not, there's still some rookies out there that are still reading those old school trading books that talk about trading breakouts, right? Breakouts don't work very well in real liquid markets like oil, right? Like the S&P, like the gold. Every once in a while, breakouts will work. Even a broken clock is right twice a day, right? But, outside of cryptos and penny stocks, breakouts, the best way to try to break out in a liquid market like this, in the futures markets, is to fade those breakouts. In other words, buy against them. Right? Wait for a market to try a breakout and trade against them. Right? Wait for a market to try a breakout and trade against them. That's the most reliable way to make a buck with breakout patterns. Now, the next thing I want to talk about though is that breakout pattern. Right? What would it take to get this market revving? Heck, there's a darn hurricane coming, a Cat 4, extremely dangerous, right? That's what they're calling Laura right now, right? What's a breakout look like? There are two types of breakout patterns I'm watching for. One is that 2-try breakout, which is a strong move up, a shallow pullback, and a higher high. Strong move up, shallow pullback, higher high. Look for a trap low, right? Look for that trap low. These are great setups. But again, you really got to get a very strong punch higher here. That's the key. Got to be a very, very strong jump higher. I want to see it clear above those highs here for that 2-try breakout. The more reliable breakout pattern is going to be that 1, 2, 3 breakout. Strong move up, pull back to the moving average, strong move off the moving average. This is where those buyers will really explode off the moving average. They didn't get it back here, right? We saw a strong move up earlier. They didn't explode off the moving average, right? Buyers have to show us proof. Strong move up, shallow pullback, right? And explode off the moving average. That allows me now to get momentum on my back. That creates a sense of urgency. I'm going to mark up that high. I'm going to mark up that low. I'm looking to buy the first test, the first pullback to the low of that new hidden channel, right? So 1, 2, 3 breakout. 1, 2, 3 breakout pattern. Now, that 1, 2, 3 breakout pattern is also the same thing we need for a reversal. So how can I sell this market right now? Well, one way to do it is wait for a 1, strong move down, 2, a pullback to the moving average, and 3, a strong move off. Now, they haven't been able to do it yet, right? No buyers, no bears there, right? So remember, the more reliable way to trade this is to wait for the market to go down, wait for them to get short, and buy into those stop losses, right? You can see those examples in the previous parts on this chart. But if those bears, if they can hold that 1, 2, 3 break down, now I can mark up that low, I can mark up that high, right? And I can sell off the high of that hidden channel, right? So really make sure you're patient for that reversal, right? Now, if the bears grab control of this, where are they trying to go? They'll probably make their way back down to that 42.40, right? That range that we started off the week here finished the week here, I should say here. No, started the week here, excuse me, right? This week, right? So back to that 42.50 area there, right? So if buyers can take it, 1, 2, 3 reversal, mark that high, mark that low, and no, I'm not trying to predict the reversal. Right? We're never trying to predict these reversals, right? Reversals are very tough to predict. You probably have already realized that on your own. And I really don't think this is a market with a hurricane bearing down right now. I don't think this is a market where you want to go look and try to call a top on this, right? As the market goes higher here, I could look for a crown reversal. It is at a turning point. I will say this is a spot where you would definitely look for a reversal, right? Because you're at that major turning point there at 43.82. If we didn't have Laura in our world right now, right? If Hurricane Laura wasn't bearing down on the Gulf of Mexico right now, I would definitely say go up. Buyers try once, buyers try twice for that crown reversal. And we may see something change tomorrow. Obviously we'll be together tomorrow morning in our trade room and we'll update this plan as we get more information. But as of right now, though, it doesn't seem like that's going to be the most reliable thing on my radar for tomorrow. So in order to be a seller on this market, I got to get this thing to turn this momentum around with that 1, 2, 3 breakout. So really at this point, right, will we get that rotation? with that trap off the low? Will we get that shallow pullback trap, right? No problems there. How about that seller failure back up, or that deep pullback, right? With that nested failure going back higher here. Got a great plan for tomorrow. And speaking of tomorrow, again, don't forget all those important membership links you guys need to register for tomorrow morning's trade room. I'll put it right in the description of this YouTube video. So get registered either for the free trading classes, right, or our trade room tomorrow morning. Last but not least here, let's grab some gold here, shall we? Let's finish up this video tonight looking at the yellow metal over on the gold futures. Again, very strange today, right? Very strange seeing the gold rally and the S&P rally. It's almost like well, again, it feels like they're posturing a little bit ahead of tomorrow's Powell speech just after 9 o'clock Eastern time. This looks pretty straightforward. We know we're bullish here on the gold right now. It is a spike in channel pattern, right? That strong move higher leads into that very tight, narrow channel. Now, in all honesty, you might look at this and say, no, it's a wedge, right? So it could be a wedge. It definitely doesn't have. It definitely has the look like it could be a wedge here. So maybe it's a wedge, maybe it's a spike in channel. It looks like it could be either or. But let's make no mistake about it, right? There hasn't been a deep pullback yet today, right? There wasn't a deep, well, I mean, other than that bear market going lower and then kicking back up, just before that 9 o'clock open here this morning. So, other than that deep pullback at 9 a.m. this morning, since we've had this liftoff, again, there hasn't been any real pullbacks here. So we have to assume that buyers are waiting patiently, right, for a pullback. And this reminds me of what we talked about in last night's newsletter. How deep will the pullback be, right? Will it be a shallow pullback, a really deep pullback? Or, since tomorrow is ultimately a Fed day, right? We get the Fed Speaker Powell tomorrow morning at 9 o'clock. This is a good example where a market that goes this far, this fast, without really any pullback, just don't be surprised if we go sideways, right? So if we start going sideways here tomorrow, right? What's going to happen if we start going sideways? We're waiting for a pullback, right? We're waiting for that pullback. Now, if I can get a range going on here, when I have a bull market into a range, my job is to buy below the range at a level of support, right? So when I have a range in a bull market, my job is to find levels of support underneath the range and then combine those levels of support with an entry pattern. Now, my favorite entry pattern in a bull market in the range is a seller failure. So the key is once you find the range, then just wait patiently for the pullback. Eventually, these buyers will run out of ammunition. They will. They'll run out of bullets. And eventually, the market will pull back. Once it pulls back, now you've got your shot. Right? Now you can go out and look for bears to try and fail off the moving average. Once those sellers try, now you know exactly where their stops are, you know exactly where their pain points are, and you can buy right into those stop losses. Again, it's much easier than trying to predict the bottom. What happens is when you try to predict that bottom, right, the market makes a run lower. So what do, right? You buy it, right? You buy it. Go, okay, buy low, buy at support. But then what happens is, what happens, right? The minute you buy that thing is the minute those bears come in and run this thing lower, right? It's almost as if the market has got your office bugged, right? Or they're watching your trades, because it almost feels like once you buy that, that's the one time this market rolls over and collapses. I know I'm not the only person that's had that happen to, right? How about in the comments section, right? How about that, right? How many times have you seen that happen where they're hunting for stops, right? Hashtag, right? Me too. Hashtag, right? Stops getting run, right? In the comments section tonight. But that's definitely, right? That's definitely a situation I think a lot of us have dealt with. So of course, we want to avoid that kind of stop and run, right? Stop out. So what I'll do is I'll wait for those bears to come in and try to get short off the EMA. And if they're successful, it's a reversal, right? If they're successful, it's a reversal. A lot of times, though, they'll go a little bit lower, right? A little bit lower. They'll stop everybody out. right? And they'll take off back to the upside again. So we see that often where the market will break down, the bears will come in, they'll go a little bit lower, right? Just to tap your stop loss and then just rip, right? Just rip, break, going higher again. That's why I'd rather wait. I'd rather wait for those stops to get in play, right? And just simply buy right in those stop losses because it's just lower anxiety, right? You're not going to have as many losses that way. It's a lot more reliable, a lot more fun way to trade. So that's definitely something I'm watching for here on the gold tomorrow if we do start going sideways. Now, if we don't go sideways, right? If we keep going higher, for example, right? Keep going higher. Not a lot changes. We're still waiting for that pullback. We're looking for failures to be a buyer as we go. Now, speaking of failures here, right? Remember, 3 types of pullback patterns. We talked about this last night on the newsletter. If I see a very shallow pullback, what do? Right? You'll notice here, I got my channel, right? This channel, and I got this hidden channel. The hidden channel is the magic, right? That's the one I really want to use here. So think about it as, do I see a shallow pullback with a trap, right? A shallow pullback with a trap? Do I see a relatively deep pullback into a seller failure, into bullish pullback combination? Or do we see a really deep pullback? On that deep pullback, we look for what, right? Those 1s, those 2s, draw the trend lines, and we're buying into stops, right? Look for that trap on the way back up to retest the high. Those 3 scenarios are definitely on our radar here for tomorrow. And don't forget too, sometimes the market will pull back, right? It'll give you 2 legs in the pullback. And so what will end up happening is you want to draw that trend line down, use that trend line, right, as a level of resistance. So sometimes you'll see it really pull back deep, right? Moving average comes over. The bears will try to get short off it, right? But the stall, trend line comes down. We can use that trend line now as a level of support, right? We call those 2-legged pullbacks, right? 1 leg and 2 leg. And again, if they get that deep pullback down and they can hold that pullback and really jump off the moving average, what that does is that confirms the reversal, right? The 1, 2, 3 reversal. Mark up that low, mark up that high, and we're selling off of that, again, 1, 2, 3 reversal into hidden channel pullback. I would imagine initial targets will be back in that range at 1925, but let's face it, right? There's one big target on the mind of the sellers right now. It's back down to that 1908 and change. So again, it really all depends on, what type of pullback do we get, and the deeper the better as far as I'm concerned, right? Give me that nice deep pullback. Let me get those bears to try once, try twice, right? Draw that trend line off of that low. Get that nice strong signal candle, right, coming off of that trend line. Nice, easy, nested failure pattern, buying off the trend line, buying into stops, buying that trap. That would be what I hope we get tomorrow here on the gold. But you know what? The market's going to do what the market wants to do. So I want to make sure I am ready. And again, if we keep going higher here, just keep staying patient, right? Stay patient for a shallow pullback, for a trap. Stay patient for a deep pullback, for a failure. Stay patient for a really deep pullback, right? And a nested. And watch those 1, 2, 3 reversal patterns. Now, if the market tries to go higher here in the overnight, I mentioned earlier that gold has this pendulum swing. And so you definitely want to be careful chasing this market higher, right? If the market does start to go higher here, we still do want to wait for that pullback. Because again, you'll see here, we're going right up into some of these major levels here as we kind of turn right in those directions. So very interesting to see here how the amount of the move below the range, above the range, that is an easy objective here, 1981, right? We'll call it 1981 even, right, overhead here. So if it does start to jump here, again, we got Powell speaking tomorrow morning. If it does start to jump here tomorrow morning, if it really does jump here, if we really get a strong breakout higher like that, I would consider a 2-try trap. Right, if we did see it really jump, like really jump higher here, I would definitely consider a 2-try trap if it's strong enough, right, as we go, or it's going to really have to be one of those, right, 1 strong move up, 2, pull back, and 3, breakout higher, update the new channel, find that new channel, right, and buy the low of that channel. So as you can see, there's a lot of possibility here right now, right? I'm anticipating a range. I hope we get a pullback, right? But with the speech coming tomorrow, the world we're living in is a crazy place out there right now. So we definitely want to be prepared if the market does jump. I just don't want to chase after it, right? Either that 2 try trap pattern as we go higher, right? Big break higher, or that 1, 2, 3 breakout into a hidden channel pullback. And guys, I know I've covered a lot in this video tonight. It's kind of a fire hose of information, but that's why we do this together every morning in our trade room. Don't forget to get registered for tomorrow morning and every morning, 8 o'clock Eastern time. I'll put all of the links for you guys to get registered as a brand new member and join me in the trade room. I'll put those below this video tonight in the description of the YouTube video. Also, I'll put a big button for you guys to get registered if you're on the blog at Sideways Markets. But that's it for me tonight. I've taken up too much of your valuable time. Please don't be afraid to call the office tonight if you guys have any questions about anything we've talked about in tonight's video. Don't be afraid to use that live support tool on the right-hand side of the website. And I hope by now I've earned a subscribe, maybe even a thumbs up. And again, don't forget, if you have any questions, drop those questions in the comments section below. Thank you so much for tuning in tonight. What will tomorrow bring? Well, plenty of opportunity, that is for sure. No matter what happens, there will be some great setups to be had in our trade room. I look forward to seeing you there with me tomorrow morning, 8 o'clock Eastern time. If not, come back and see us again tomorrow night in the next edition of this nightly newsletter. My name is Joseph, by the way. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.